Back in 1999, when Canadian telecommunications and wireless equipment company Research in Motion introduced its first Blackberry pager, developers were appealing to enterprise sector users. The pager's key feature was its ability to retrieve push email from a Microsoft Exchange server by means of its Blackberry Enterprise server software. The first Blackberry smartphone followed only a year later, and in the 13 years since then, Research in Motion has consistently held its own among the leading innovators of mobile technology. BlackBerry quickly expanded into the consumer market with products like the Pearl 8100, its first model to incorporate a camera and other multimedia features, helping pave the way for the standard feature complement that modern smartphone users may now take for granted. The company's subscription rate has climbed exponentially since 2003, and today BlackBerry users number in excess of 76 million worldwide. Though the percentage of U.S. consumers has dropped off significantly since its peak of 21 million in 2010. Most recent company headlines have been considerably less rosy, however, and it seems there may be some turbulence in BlackBerry's future amid growing competitive pressure in the mobile computing market. Earlier this week, Comscore released its most recent mobile lens data regarding the U.S. smartphone subscriber market share as of May, and the numbers reveal that BlackBerry OS platform is losing its already lagging traction against Apple's iOS and Google's Android platforms. Whereas Android and iOS user bases increased over the past 3 months to claim a 52.4% and a 39.2% of the market share, BlackBerry's users have fallen off from 5.4% to 4.8%. What those numbers might mean for the future of BlackBerry's proprietary platform is uncertain. For now, it's clear that Research in Motion intends to persist in developing its newest platform incarnations, BlackBerry 10 and BlackBerry Enterprise Server 10, even as pressure mounts for the company to give in to consumer pressure, equip their developers with Android OS, and give top hardware competitor Samsung a run for its money instead. The Samsung name is, after all, rapidly becoming synonymous with Android. One thing is quite uncertain though. BlackBerry is not only losing brand traction, it's also struggling to maintain market value. Research in Motion's share price tumbled 28% late last week, following news of lackluster BlackBerry 10 device sales and a staggering $84 million net loss in the first quarter of 2013. It doesn't help that CEO Thornton Hines has also announced that the company will not be moving forward on its earlier plans to bring BlackBerry 10 support to its Playbook tablets. Ironically, the BlackBerry 10 platform upon which Hines is hanging the company's future was developed as a result of Research in Motion's 2010 acquisition of QNX Software Systems, whose real-time operating system provided the basis for the BlackBerry tablet OS. Given the history of BlackBerry's missteps bringing the Playbook to market, few were surprised at the announcement, which many users regard as tantamount to a death notice for the ill-fated tablet. Yet it does leave a rather conspicuous blot in the company's identity, one of the several that seem to have investors feeling skittish about the brand's ability to compete alongside Apple and Samsung. Still, brand loyalists are hanging in there. Some believe BlackBerry's future lies in a return to enterprise sector focus, leaving Apple and Samsung to dominate the consumer market. Others look toward BlackBerry's still formidable influence in the global market and the potential for its expansion of non-US consumer bases. Still others insist that BlackBerry's pride of place as the independent alternative to both Android and iOS is in no danger of disappearing anytime soon, if only because server carriers seem to appreciate the value of third-party competition at what is increasingly looking like a mobile platform duopoly. Only time will tell whether the BlackBerry brand is approaching the end of its life cycle or gearing up for a surprise turnaround.